5 investments that will make you rich slowly but surely. Getting rich fast is every beginner's fantasy, but in the real world, wealth built slowly and strategically is not only more achievable, it's far more sustainable. While flashy crypto trends and overnight IPOs may dominate headlines, most self-made millionaires didn't sprint their way to fortune. They built it brick by brick using long-term investments that grow consistently over time. In this video, we'll reveal 5 investments that won't make you rich overnight, but will make you rich surely. If you stay patient, consistent, and disciplined, these investments can transform your financial future without the emotional roller coaster of hype-driven assets. Let's dive deep into each one. 1. Broad market index funds. Index funds are the foundation of long-term wealth building. Instead of trying to beat the market, index funds match the market, tracking a major benchmark like the S&P 500, NASDAQ, or total stock market index. And over time, the market has historically gone up. What makes index funds powerful is their simplicity and built-in diversification. By investing in one index fund, you're essentially spreading your money across hundreds, sometimes thousands of companies. This reduces the risk of individual stock failure and mirrors the growth of the overall economy. Most index funds charge incredibly low fees, sometimes less than 0.05% annually, meaning more of your money stays invested. In 2025, with economic recovery picking up, funds like VTI or VOOO are outperforming many active funds, and when you reinvest the dividends, you unlock the power of compound growth. If you keep investing monthly, even a few $100s, your portfolio can snowball into 6 or even 7 figures over 15 to 20 years. The strategy isn't flashy, but it works, and it works almost every time. In addition, index funds are incredibly liquid, allowing you to buy or sell without delays or penalties. This flexibility makes them ideal for both beginners and experienced investors. Plus, since they're passively managed, they tend to outperform most high-fee mutual funds over the long run. It's a true set-it-and-forget-it strategy for building wealth. 2nd, dividend growth stocks. While some companies offer high dividend yields, dividend growth investing focuses on companies that steadily increase their dividend payouts year after year. These firms not only return profits to shareholders, but also demonstrate financial health and long-term stability. In 2025, sectors like consumer staples, healthcare, and utilities are leading the pack. Companies that have increased dividends for 10, 20, or even 50 consecutive years, like those in the Dividend Aristocrats list, offer a reliable path to wealth. These stocks give you the dual benefit of price appreciation and rising income, which means your purchasing power doesn't get eroded by inflation. Over time, reinvested dividends become one of the biggest engines of wealth growth. With tools like dividend reinvestment plans, DARIPs, your payouts are automatically used to buy more shares, increasing your future dividend income. The beauty of dividend growth is that your income rises even if you don't lift a finger, turning your portfolio into a quiet, compounding machine. Another advantage is stability during downturns. Dividend-paying companies often outperform volatile tech or growth stocks when the market dips. These businesses tend to have strong cash flow and mature operations. And with rising inflation concerns, having an income stream that grows each year gives you financial breathing room that few other assets provide. 3. Real estate, rental properties, or REITs. Real estate has always been a long-term wealth builder, and for good reason. Properties can appreciate in value, generate monthly rental income, offer tax benefits, and hedge against inflation. But in 2025, many investors are split between owning physical rental properties and investing in REITs, real estate investment trusts. Rental properties offer predictable cash flow, especially if located in growing cities with strong demand. You earn monthly income while your property slowly appreciates over time. Combine that with mortgage paydown from tenant rent, and you're building equity with every passing month. Plus, tax deductions for depreciation, repairs, and mortgage interest add up quickly. For those who don't want the responsibility of property management, REITs provide the same exposure without the headaches. These companies own or finance income-producing real estate and distribute most of their profits as dividends. From commercial buildings to data centers, you can get exposure to various sectors for as little as $100. Over time, these investments offer both capital gains and rising income. Real estate also provides leverage, using borrowed money to grow wealth. A well-managed property bought with 20% down can return significantly more than your initial investment. REITs, meanwhile, are great for diversification and liquidity since you can trade them like stocks. Both options offer long-term income potential with real, tangible value behind them. 4. Bonds and bond funds. Often overlooked by younger investors, bonds are essential for building wealth steadily and safely. They may not have the excitement of stocks, but their purpose is different: income stability and capital preservation. Bonds are essentially loans you give to governments or corporations. and they pay you interest in return. In 2025, with interest rates stabilizing, high-quality U.S. Treasury bonds, municipal bonds, and investment-grade corporate bonds are providing yields between 4% to 6% annually. These returns, while modest, are much more secure compared to equities. Bonds also act as a buffer during market downturns, reducing portfolio volatility. Bond funds, especially target date or laddered bond ETFs, offer an easy entry point. You can invest small amounts and still get diversified exposure across multiple maturities and issuers. For long-term investors, adding 20 to 30% of their portfolio to bonds offers steady income, protection, and balance. Over time, this combination helps wealth grow more predictably, even if stock markets fluctuate wildly. Another reason bonds matter? They protect your portfolio from emotional decision-making. When stocks fall, bonds usually hold their ground, keeping your overall performance steady. This psychological stability helps investors stay invested long enough to see results. Bonds also ensure retirees can count on a predictable stream of income without excessive risk. 5. Your own business or side hustle turned automated. One of the most powerful slow-growth investments isn't in stocks or real estate. It's in your own income-generating business. In 2025, thanks to AI tools and automation platforms, it's easier than ever to start a digital side hustle, scale it, and eventually automate major parts of it for passive cash flow. Whether it's selling digital products, running a drop-shipping store, publishing low-content books on Amazon, or monetizing a YouTube channel, you can build something that generates income while you sleep. The key is to treat it like a long-term asset, not a short-term hustle. Initially, it will require time and effort. But once systems are in place, automated customer service, email funnels, social media schedulers, and AI content tools, it can continue operating without your daily involvement. Over time, a small project can evolve into a reliable source of income, helping you diversify beyond traditional markets. You are essentially building an asset that appreciates with effort, not just money. What sets this investment apart is control. You're not relying on the stock market or housing prices. You're creating your own cash flow engine. Even if you reinvest 100% of profits at the start, long-term gains can far exceed any passive asset class. And with compounding systems and AI tools, scalability becomes almost infinite. Getting rich slowly isn't about playing it safe. It's about playing it smart. The investors who consistently win aren't chasing hype or timing the market. They're planting financial seeds and giving them time to grow. Whether it's broad market index funds, dividend growth stocks, real estate, bonds, or an automated side hustle, the key is consistency, patience, and strategic reinvestment. Wealth that lasts isn't built in days, it's built in decades. But those decades pass whether you invest or not. The difference is, 10 years from now, you'll either be glad you started or wishing you had. If this video helped you rethink your wealth-building strategy, don't forget to like, comment, and subscribe for more no-fluff investing insights. Your financial future starts with what you choose to do today.